Nothing said on the Hivemind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice.
Hello, everybody. Welcome back to another episode of the Hivemind podcast. I am your host, Citrini. I'm head of research at Delphi. We've got Jose back, who's been out for a while. Of course, Jose is head of Delphi Labs. And then we got Jan, who's a venture partner, and Jason, who is head of markets at Delphi Research. So we're recording this on Wednesday, March 3rd, 10:30 a.m. Bitcoin is at 73K. So we'll probably top tick this, but like it's the last couple days, it's been pretty strong. And even on like the down days, it was kind of chopping mostly as stocks sold off a lot. Um, so and this is with all the war stuff going on. Of course, US launched a strike on the 28th, which was on Saturday, I believe. So we're like a few days into that now. But yeah, you've seen pretty good. It hasn't just been Bitcoin either. You've seen a bunch of alts across the board do well. It's been pretty broad in general, at least regards to like the majors and stuff. So yeah, I don't know, how are people feeling about the market right now?
Sure, I guess I'll start. Sorry, my cat is just freaking out running on the thing over there. Yeah, no, I mean I'm happy with the reaction crypto's had, right? Like generally speaking, if you had like a day like yesterday in equities where we were down, I don't know, like 1.5 to 2%, generally Bitcoin and crypto has just died, right? Like -5, -7%. And it's kind of like the first time in the last couple months you've seen crypto kind of have a good reaction to bad weekend news, and then kind of hold strong while equities decided to not do too well at the open of the week and stuff. So like all of the, like, I guess qualitative signs you would want to see for, like, some kind of appetite returning back um is there. So like, it's definitely constructive. Like market structure wise, you're breaking some important levels, so you want to see that hold and not immediately just retrace in the next day or so. um I did read something this morning that came across my like little brief that I have set up. Actually, this one came through Telegram from Scott. But you're starting to see like kind of like these, correction technical signals start triggering. Not like, they're not saying that like the equity market or whatever is like going to pull back or go through like a mini correction. It's just saying that it's seeing some stresses in credit and vol spreads and things like that. So it's just kind of like an early warning of like, hey, like, if these shocks persist for a prolonged period of time, as opposed to maybe like a week or two, like you could start to see some stresses manifest in equity markets. And these types of signals, I guess, like they're better when there isn't like an external shock, like an Iran war type thing. It's like better when it's all like internal market stresses signaling these things. So like that's why you kind of want to wait and see how this conflict sort of plays out over the next week. But like, I don't know, seems like equities, seems like crypto, seems like everything's kind of just like not really giving too much of a shit after the
Asian
first day
markets
or so.
got kind of destroyed. Like Chinese stock market and Asian markets generally took a hit. But yeah, US seems to be
Truck and Miller's cooked.
yeah,
Yeah, I think Korea
Korea
was
got
down like 10%, right?
I'm sure he bought in at a good entry, and obviously, yeah, he's still one of the goats. But no, it is pretty funny. Like shortly after that, it hit like double circuit breaker.
I mean the Korean market is up like 2.5x or something over the last like year or 18 months, something like that.
The Koreans, no
crazy.
matter which financial market, the Koreans just like,
They just buy.
yeah.
Yeah, I mean it's interesting. I think Korea and Japan are two of the only economies that really benefit from like everything that's happening in AI, just because of how they're positioned in terms of like memory and like just high tech components that go into the AI stuff.
Yeah, but they don't have the energy, right? And that's why, well, Korea, I guess. I think Korea gets what all its exports, like most of it from Qatar, I think. And that isn't that like the reason why Korea's sold off over the last day?
Yeah, I have no idea, honestly.
I'm pretty sure that's why, but yeah, I don't
Okay.
quote me on that.
Yeah, I have no idea.
So yeah, I don't know. I definitely took some longs over the weekend when I started to see what the reaction was to everything, and I'm just kind of watching. I don't know. I'm cautiously optimistic, but even without that, like short term stress signal starting to kind of pop off, equities were losing momentum for a while, so it's still something I'm generally keeping an eye on. VIX is elevated, so like if we get like a VIX blowout, like an actual one, like I'd probably just like shove most of the cash I have into risk assets, because I think like the general backdrop still is relatively strong. So if we got some kind of opportunity like that, I would fucking shove probably.
It's just crazy how many stocks have got killed and the index is only like 2% off
Yeah,
high.
right. Yeah, and that's kind of like what that correction signal thing I was talking about. It kind of like measures like stresses in credit spreads and volatility with respect to where the market is trading. And since the market's trading effectively, within a percent or two of all time high, they tend to be pretty strong signals when they do start popping off. So something I'm keeping an eye on and will probably write about in the next day or so.
Yeah, it is unique though, in that the amount that they drove the market is so massive, and their slowdown isn't necessarily a function of like slowing GDP and growth and there being kind of economic weakness, but rather just the sustainability of the spend and the maybe we need to be discounting future cash flows a bit more if like there are delays and basically the debt schedule doesn't align with revenues and all the leverage that was built up to kind of fund this build out. So people kind of got worried and just the unknowns of AI. So like you do have this dynamic where you do have the leaders falling, but you also have a setup where you don't necessarily need there doesn't need to be this massive follow through all the way through the market because it seems pretty contained to those names for specific reasons.
Yeah. I guess yeah, and I guess on like the Iran war specifically, this has been something that we've been talking about for at least like 2 years now. So if we do get a resolution relatively quickly, you gotta expect that to be a pretty big tailwind. And I feel like that's kind of why Bitcoin has been reacting the way it has. Not that like war is good, but that people see a potential end to this. Um, but yeah, I guess we'll see how the next like week or two goes.
I mean,
Um,
the effectiveness of the campaign has been nuts. I think the other element is there's always a concern around the closing of the Strait of Hormuz, and Trump came out and basically said they're going to be patrolling it and trying to create as little disruption as possible. But it's still a pretty delicate balance, and any disruption is definitely going to kind of reverberate through the global economy. But I think that's probably helping it a bit, where it's not this. That I think that the tail scenarios have kind of come in a bit.
yeah. Do we want to keep talking about markets, or I know Jose, you want to talk about AI? Maybe we want to just like go talk about AI from here. I
I think there's
think,
some value in like crypto AI tokens that have done well too. If we wanted to stay on the markets topic, or we can pivot.
yeah. I mean, I think it's mostly Venice and Near, right?
Grass
Um, Grass, right?
virtuals have done
So
pretty well.
Virtuals has done all right.
virtuals.
Yeah.
So Venice is because Venice is like It's like this private model, and then people have been using it with OpenClaw, right? And so that's why it's kind of got bid. And then they have like a dual token model where if you buy DM, it equals like $1 of compute a day. And I think that went from like $100 to like 680. And then like you stake it, and then you get the compute, I guess, that you need. Um, and then VVV, I guess, is the token that gets all the income and everything. I wasn't really paying that much attention to Venice over like the past year. I know it launched like over a year ago. It launched right at the basically pico top of AI agent season. It was like a pretty good airdrop for most people that were like using base and had a lot of these agent tokens and everything. Um, I also think like, did you see I'm not sure how it's done since then, but the OpenClaw like the OpenClaw founder he hates crypto. Like, and I think he like specifically like blocked Venice, or maybe
No,
he
it
just
was
took it from the
basically
default.
it was listed as the primary and go-to, and so that created, obviously a lot of excitement. There's a couple things. So there was the privacy narrative, and which were really driving the price action, and then you had kind of FUD on both sides where people are coming out and try and saying it actually isn't private, and so there's quite a bit of back and forth. I don't really know where it's settled out, but I guess it's worth noting that the people that are coming out against it are kind of building competing products. But yeah, that part hasn't really been resolved. And then the open claw element, he just basically removed it as the default, but just listed it as one of the many options, basically. And his argument was just that he wanted to remain neutral, is a Twitter comment the open claw founder made. And so the idea was just to not bias any individual one, and rather just leave it to the user, which I think is pretty fair, and isn't it's like a downgrade in terms of the narrative for the token, but it's not necessarily a net, just a pure negative in that scenario. Yeah, the DM stuff is interesting, right? If it's a dollar of compute a day, at 120 dollars, it pays for itself in 4 months, and then obviously as it really balloons, it makes that payback period quite a bit longer. And then you basically deposit VVV and mint DM, that allows you to mint it. So you could buy it directly or mint it. And so there's an interesting kind of relationship there where as demand for free usage goes up, you basically, it's easier to mint it than it is to buy it. Um, and so that drives demand for BVV and kind of creates a loop.
How
But
do you
yeah,
wait, how do you mint it though? It's like, I'm assuming it's not like every VVV has like a certain amount they can mint in their life. It's like you need to stake VVV for a certain amount of time or something.
yeah, you stake it, and then the minting function is based on the supply of DM. So as the amount of they target a specific amount, and as the quantity goes up, you mint less and less, and then as the quantity of it comes down, you're able to mint more. So it's this dynamic mint rate, um, that's based on kind of the amount of DM that exists.
Okay. And then what's the incentive for like burning DM?
I think to unlock your VVV, basically.
Oh, okay. Oh, okay. So your VVV, I see. Your VVV is like locked. So yeah, so you could like mint it and then sell it, but then it rips, and then you're kind of like, oh shit, it's gonna cost me way too much to get back my VVV.
Yeah, I mean, it definitely has a bit of a natural ceiling because of the payback period, right? Like
Yeah.
at that point, you just rather pay for the compute directly.
Yeah. Okay. Yeah, I've seen
You
a
do,
lot of people using it. We have like an open claw chat with a bunch of people at Delphi. See a lot of people have been using it recently, which is cool. It's like, I don't know, it's actually AI and crypto is definitely, I like, everyone soured on it over the past year or so, because agents like pumped and dumped, but it's still obviously kind of like the area that makes the most sense. Even like I was talking like with regards, and we'll stay on this topic, but just because we're on it, like this whole solar founder era, right? Where you've never, for the first time, really, it feels like you can have a solar founder create a product that's like 10 mil, 100 mil ARR,
Yeah.
right? And that's like
You haven't
perfect
seen
for,
that though,
we
interestingly.
haven't, we haven't, but that's also perfect. Like that's really literally perfect for some of these like MetaDAO, Soar. I think there's like a tokenized equity one, like these platforms where those kind of founders are not venture backable, right? Maybe one, but like for the most part, they're not venture backable. They like it's one guy. It changes too quick. All this stuff. They don't need to raise a ton of money. Like it really does seem like this is like capital formation has always been crypto's killer use case, and it's like, I mean, I
Yeah.
know we've been saying stuff like this forever, but it sometimes stuff just takes time, and it really feels like this is such a big opportunity for crypto.
Yeah, I really like did any of you guys read the 2025 like Ribbit report on tokenization?
Yeah, the token report.
Yeah. I really liked it because it was like quite elegant the way it basically described it was a report on tokenization, which covered both AI tokenization, so like LLM word tokens, and then also crypto tokenization. And the way it defined tokenization is making the world legible to for computers, which I think is like very true and very like elegantly applies to both kind of right like LLM word tokens make the world like literally legible to AI models, right? And then crypto tokenization I think makes like capital to some extent like legible for computers. And in the case of crypto I kind of change it to making the world legible to computers to make it legible to capital. And I think it's like an interesting way to think about it and to think about what it makes sense to tokenize. Um, yeah, because we kind of seen it with crypto, right? Like meme coins kind of make this like culture or belief or attention or whatever uh suddenly tradable because they make it legible, right? They turn like a dog meme into something that's discrete, priceable, transferable, enforceable, and now you can bet on it. And then like governance tokens, you kind of make power over an open source system like legible and now you can bet on it, right? Like you can control the parameters of an open source system or get fees from it or whatever. And I think you can go down the list. Um, yeah, I just think, and I think AI tokens to some extent, uh, yeah, I think like agents are like a reflection of this. And he wrote that post, and I think A16Z has a good one too, of just like how these rails were actually made for machines rather than humans. And I do think if an AI wants to be truly sort of sovereign, like it just makes a lot like you can deploy a smart contract without needing an API key or without interacting with any centralized services, right? Like all you need is to have a wallet and like a server to some extent. And you're already seeing these like emergent behaviors with like OpenClaw agents. So I do think the thing we were all bullish on a year and a half ago, or whatever, is gonna happen. But I think it hasn't happened yet. Like you kind of know that's one thing I've kind of learned in venture. I think you kind of know when something has reached the like that's happening, right? Like you haven't had like the OpenAI, the ChatGPT moment for this, I don't think. Um, and I don't know what it will be like what the use case is that actually drives this stuff. Like it's hard to say right now, but I do think it's going to happen and they're going to be interesting plays. But I'm not sure if
Got
any of the
any
ones we have
ideas
right
on
now
what it
are.
might look like since you probably got your claws in a bunch of this AI stuff?
Um, no, honestly, I have no idea what the first like crypto AI use cases will be like because I think agents can use crypto rails, already.
Well, I mean,
It,
Venice is like that's something.
it's interesting, but I don't get what the private. Did you guys look
I
into
don't
where
know
the
what the
privacy comes from?
private. I don't know where the privacy comes from now.
Yeah, there's like different definitions of it. If it's a mixer, if it's some degree of obfuscation, they mentioned way back in early 25 where they were trying to do it to encrypt the the kind of the prompts and the outputs. I don't know if they've gotten there yet.
Yeah. I don't know what because the only reason to use this is privacy, right? Like, because Cursor is not just a model aggregator. Like, they have their own models that do a bunch of interesting stuff. Um,
Well, I mean, like the token model is like something kind of interesting, and like owning the like VVV. I'm assuming gets like revenue share from people
Yeah.
paying for compute. I mean, that's I don't know, that's cool,
yeah,
and
it's
it's
for
like
sure
open
cool,
source, right? So, but yeah, I
but
know
it's
what you're
not
saying.
like there needs to be a fundamental reason still to use VVV, and it's also like it's still not on chain, right? It's like um, you buy this stuff on chain, but then there's a centralized service that you're reliant on to, like, host the models and honor this conversion and stuff. So I don't know. It doesn't. Yeah, I guess no one really cares once these things start going up.
Yeah, I don't necessarily know that it needs to be on chain though.
I think that like the point, like crypto helping AI here is for really like the capital formation and like that whole side of it. I don't know if like things are going to be directly on chain outside of like the token and like the economics of that and everything,
I
I
also think
guess.
like USDAI is pretty interesting on that front, where basically
We're investors, by the way.
allowing asset backed loans, right? And so you create um liquidity for these assets where otherwise it's locked. So the ability to kind of borrow against your hardware to unlock additional liquidity.
I don't know. Near is also, like, I think what they're building is pretty interesting, and I think I saw a lot of people hating on them on the timeline for, like, how often they change their narrative or whatever, going back to algo stablecoins back in the day when they had their Near USD. I think that's just like what you're supposed to do to try and find product market fit as an L1, and I think with the AI stuff, like, they've always been thinking they've been building this for like years, like the same narrative of like user owned AI and what you need in terms of the stack to do that, privacy and stuff like this. And I know, having spoken to Ilya, like, he definitely has a lot of opportunities to not be doing, like, a lot of founders in crypto, slow rug or just literally rug with a lot less opportunity cost than what Ilya has, being he's like super deep into AI and one of the authors on the original Transformers paper. And he's like consistently just kept shipping on Near, kept building cool stuff. So I don't know. He's definitely one of the most credible, like, well, he's definitely the most credible crypto AI founder in the space, I think. Like, and yeah, like, a lot of the stuff he's doing makes a lot of sense, right? And you're kind of seeing it now. Like, you do want, and if this TE stuff works, I do think there's going to be like some pretty serious demand for it. Um, yeah. So
No,
I think that's
yeah,
one of
like I agree. I don't think that. I mean, I used to make fun of all their pivots too, especially when they did near DA. I was like, "Hey, come on, guys!" But it does kind of highlight that they're able to like ship like actual products pretty quickly, and they're pretty adaptable and like like near intense. Okay, he basically got pilled on intense by Adrian and Anoma and was like, "Oh, this is actually pretty cool. Let's do this." And now Near Intense does like all the Zcash volume, does a bunch of other stuff. And so they continue just to get shots on goal. And then once they get products that work, like Near Intense, now they're doing other stuff too, right? And like they
Yeah.
keep doing this, they can build a pretty big suite. I've been impressed with like I've never really held Near. I've held it like a couple times in the past and it never worked out. um but, like, I do respect there are, like, technologists too, and I do respect not actually launching, like, multiple tokens for all these products and everything, right, and continuing to do it under the Near umbrella and trying stuff, and their new thing is this, it's like Iron Claw, right? So what is it,
Mhm.
like Open Claw with TEs, right? Is that essentially what
Yeah.
it is?
Private.
And that's another good
Yeah.
shot on goal, right? Like
And even now, we just with Intense, like they're now slightly deflationary, because they burn a portion of the Intense revenue, and they have some emissions for network security, and they're actually slightly
yeah.
deflationary, which like is pretty unheard of for an L1 that's not kind of predicated on token transfers. It's like a business model in the L1.
Yeah, it's definitely worth looking into them deeper. I know I saw a bunch of Tau guys on the timeline angry that people were trying to make near AI the the iPlay. But I mean,
That might be why they're so hated, though, right? Is because they've just like jumped in on narratives, and then the existing ones are just like, "Hey, man, stay in your lane."
yeah, like no, even like Intense, like Anoma was so early to Intense, and they're right about that becoming such like a dominant way of using blockchains. But then Near just came and was like, "Oh, we're gonna do all the
That's our
Zcash
narrative now.
volume," and they took it, and it's like, you know, as an Anoma investor, it's kind of like, damn, that sucks because like
Yeah,
they were that would be that's such a Anoma's whole thing was always privacy and Intense and everything, and it's like being the Zcash trading layer is
What's up with
literally
Enoma
that, right?
actually? What's Enoma up to?
They're launching they launched they're launching their router on a bunch of the EVM chains in Solana. I'm not sure when yet, but then you'll be able to do like all the cross chain intents and everything across all those chains, and then so it will be a competitor to Near Intents. And then they also like Anoma's always been big on the privacy, right? I'm not sure, like trading privacy, not just like trading Zcash, right? So they'll definitely be a competitor to Near Intents. Um, I know that they were also working on some in-house products that I'm not sure the status of right now, but yeah, they're still. I mean, they're still launching a bunch of their stuff soon.
Jose, how are you? I know you mentioned this before we started, and while we're kind of still on the AI topic of things, how are you positioned nowadays? I know you've made some moves over the last couple months, and as somebody who doesn't have enough AI exposure, this is kind of a selfish question here. So please spill the beans.
Yeah. I mean, initially I was pretty overweight, like the basically just the hyper, like I can think we talked about it actually on this podcast a bunch of times. I was just basically overweight the hyperscalers, both the US ones and the Chinese ones. So like Nvidia, Microsoft, Google, Meta, this kind of thing, and then Baba, Baidu, Tencent, and a few of those names. Um, I think over the last few months, I kind of started seeing like I don't know. I used Copilot the other day, and it's like shockingly terrible. Like I use it because actually my one of my uncles is like that's his experience of AI, and I was like, dude, yeah, this yeah, and I just think that in general the hyperscalers have kind of like other than Google have failed to execute on AI like at the model or application layer, right? They're just owning the compute, like they don't have like and it's kind of like all their businesses. I'm not sure. Like for instance, like Office is still going to be a thing in a AI era. Like, are you still gonna do PowerPoint and like literally AI can just code you up a presentation in HTML as a website, right? Um, and like Word and all this stuff. I just don't know that these things will still be like going concerns. And I feel like they just end up and the same with like Amazon. Like I'm not sure you keep you're gonna keep ordering things on Amazon. I think like agents are just gonna order directly and have access to like all this information. Um, so then it's like they basically are like compute businesses, right? Like that's the biggest thing that keeps accelerating, and I think it will keep accelerating because they basically have like own most of the compute. Um, but at some point, if the application and model companies are making all the money, they own the user. They're just gonna like vertically integrate up the compute stack. Kind of like what Grok is doing with SpaceX. Like you'd imagine they just own the compute themselves, and so I think it'll the margins will go down like quite a lot on the cloud businesses over time. I don't think it'll happen yet. Like I think over the next 12 months, you're still going to see like revenue accelerating and stuff like that. But at some point, I think the market starts repricing them, where they're not these like monopolies of these massive like monopoly businesses they have in software, but actually just like hardware businesses with not much differentiation, like very price sensitive. Um,
and like yeah, so and I also think a lot of stuff's gonna happen on prem too with AI, like not just with people are gonna run like these open source models locally too. So yeah, all in all, I'm just kind of like not as like initially it was like these guys have the talent, they have the data, they have the capital, they have the distribution. It just seems like they're going to crush everyone. But now the model companies have out executed them so badly. I'm seeing so much stuff in private markets that's going after like all the different parts of their business, that it just feels like you have to kind of go up the stack to some extent. And so the way I'm playing it is just, um, by all like if you look at Epoch AI or whatever, it seems like the next big bottleneck is going to be like energy. And I'm like very AGI pilled, so I think we're going to have like compute build out for 5 years. I don't think that slows down anytime soon. And so just thinking about all the things that need to be that need to happen for us to have this compute build out that would that I think is going to happen. It's like one of them is energy, right? Like the gas turbine companies, like I have like Siemens Energy, and I have a company called Bloom, and a few others where it's just like they basically produce gas turbines. Their revenue is like inflecting. They have massive wait lists, and like gas turbines are the way to scale energy, just because you don't rely on the grid. You can actually like produce it yourself. Um, and then I have like Constellation Energy, a bunch of others. Then I think the infrastructure companies are interesting too. Like Constellation Energy would be in there. I think some people would go long CoreWeave and things like that, or like some of the suppliers, like the cable, for instance. Like I know people have done that, like the electrical cable that you need to build out this stuff. And then just like commodities needed for chips and electrification. The biggest one's obviously copper, but then like rare earths and minerals as well. Um, and then yeah, I have some other stuff. I have a lot of gold, um, and I have some defense, like especially European defense, because I think that's like up only from here. Like after what Trump's been doing, I think it's kind of yeah, Europe. No matter what they think they have to rearm. They've committed like 800 billion euros by 2030 in rearmament. So I'm just yeah, I think this stuff yeah, it's sort of not as exciting as crypto. I don't think it's gonna have as big upside as crypto, but it seems like yeah, it's just the only way I could play that makes sense to play like the public market stuff, at least for me right now. Yeah, and then I'm still very bullish on China too. So I'm about to go there for a few weeks. So gonna be meeting with a lot of uh like founders and actually some public company CEOs and try and figure out like how to play that, because I think it's really interesting what's happening there. Um yeah, that's basically how I'm thinking about it, but curious how others are playing it if you are.
No, that was great. I'm still trying. Like I said at the beginning, that was a fairly selfish question, as I'm trying to put together all of the moving parts. Obviously, I think the Europe defense allocation makes a lot of sense. Whether or not, right, that's it's what Trump wanted or not, who cares, right? Like that's what they have to do given everything that's happened. So it makes a lot of sense. Uh, yeah, I mean, I need to look into a lot of the energy and other AI adjacent type things you were mentioning outside of the hyperscalers, because last year I really didn't do a good job of getting a ton of exposure during the tariff tantrum, and honestly that was probably my biggest fuck up last year for sure. Um, so I'm trying to play catch up and trying to figure out like what the ideal like I don't know, thesis or allocation looks like today, without any of that foundational portfolio positions from last year. Um, Gold also has been something I've been buying a lot of as well. Just kind of collecting different little gold bar things. And yeah, just actual physical gold, not like GLD or any of that bullshit, like actual gold. Um, yeah, and then crypto, like I'm actually fairly bullish Bitcoin. Like I bought like I said, I bought some over the weekend. I think if things kind of keep going the way they're going, Bitcoin specifically makes a another kind of resurgence with institutional capital. So yeah, I don't know. Similar, I just don't have the AI sleeve or allocation yet, really, and it's kind of killing me inside.
I definitely think international will continue to do well. Like you're
Yeah.
also hearing people like international. I'm like a lazy stock investor. I just go on the global index basically because like I don't have time to like. I spend too much time in crypto that I'm not going to
I think
delude
that's smart.
myself into thinking that I can like play all this. But like international has now been outperforming for like close to a year and a half, and people are taking it more seriously. And the more it's kind of like the longer it's like kind of Lindy in a sense, where like the longer international continues to do well, the more and more people are going to start allocating to it, which will like in turn cause it to do well. And like if the dollar is going to also just get weaker over the next few years, that again just boost international returns from like the currency gains, right? So, and then to your point, like the defense spending, I remember there was like March or April of last year when Germany, I think it was, came out with that massive like defense spending announcement. And that basically since then has like set off a lot.
Yeah,
Um,
the index has 2x'd the European defense index.
Trump's also
So
forcing it, saying everyone needs to up to 5% for
yeah,
NATO spend.
I think it's gonna happen. It also creates a lot of private market like opportunities too, because like yeah, privates in defense are just like inflecting revenue like crazy right now. Like everything
What do you
from
mean in
drone
the
companies
privates?
to
Like
missiles,
what are you kind of
like
talking about?
startups
Oh, okay.
basically. Yeah, um, are like a lot of them are just inflecting like crazy. We've also been spending a bunch of time with like some of the Ukraine drone startups, like super interesting stuff happening.
yeah,
Like
drone seemed like a pretty good like I don't know what multiples they trade at. Um, so obviously valuation matters, but that's like such an obvious defense sector that is kind of just up only in terms of like usage, right?
in general, I've been trying to simplify it. Like the way I think about my portfolio is I think there are like three important trends happening in the world in my mind. The first one is like AGI is coming. To me, that's like the dominant trend, like the thing that's most important that's happening in the world because I think it's going to drive the most change, the most capital, the most everything, and it has a bunch of offshoots. The second one is the world is moving from like unipolar to multipolar. I think with the rise of China, what Trump's doing, forcing Europe to rearm and just become more independent, like all this kind of thing. And then the third is like currency debasement and debt and just like fiat going to zero. And I basically think like I want to have a portfolio that in like I'm basically trying to construct an index that is like levered on those three trends rather than just a world index, if that makes sense. That's how I think about it. Like just and so yeah, I think Bitcoin and crypto has a place there, and then I think the other stuff I was talking about has a place there, and I do think private markets, so like the stuff that venture investors invest in, and to some extent private equity is going to have a crazy like few years too, just because of the amount of like displacement and innovation that's happening, and it's so hard to pivot an existing company to adjust to it. Like we've kind of even seen it at Delphi to a smaller degree. Like we've been trying to obviously over the last 3 years we've been trying to get more and more active in AI and get everyone clued up on this stuff. And it's hard, right? Like it's hard to get people to research these things, to use the new tools, to learn something completely new and outside of your comfort zone. And we're like we're like 70 people or something, right? And if you think about like 1,000 or a few thousand or tens of thousand company, it would be such a hard task to get it to pivot. And I think some companies are just cooked. Like India, for instance, has a $300 billion. I was researching this the other day. It's a $300 billion IT outsourcing sector. You
Yeah.
know, and that to me just seems it's 8% of the economy. And that to me just seems like it's gonna get decimated, right? Like you just don't.
And quickly.
Yeah,
Like it just
and
happens.
quickly.
Yeah.
The crazy
Flip
thing
the
is
switch.
Q4 it was up like 8%. So these things just happen and like Google search revenue is still up like so these things just happen slower than you think when you're at the edge, but like still it just seems inevitable that. So even I was looking at Leopold Ashbrenner's portfolio. He shorted Infosys this quarter, which is like the biggest India IT outsourcing company. Like, I think that's a really interesting. I think like in general, it's like the return of active management and like hedge funds and like people who have their finger on the pulse right now in public markets are just going to print. Like long short, I think is going to have like a resurgence. Before you could just like with passive and stuff, it was just everything was up only. You just got cooked on shorts. I think you're going to be able to make a killing on long short and just like analysis and all that shit again in this transition.
Oh yeah, definitely. This is like the active manager era. I think it's really. We said at the beginning, like a lot of stocks are getting hammered, but the index is close to all-time highs. Like you have seen all this rotation. It is very. I think most people are kind of excited by the prospect of this new market environment that we just haven't had for like 10 years or so, right? I think your point on like companies using AI and all this, like we've definitely noticed an increase over the past probably like just like 2-3 months. Like a lot of people internally are using OpenClaw now. People are like vibe coding their own things. And Neil's been really pushing a lot of AI stuff internally, and like we still feel behind. But then it's like if you think about a lot of the banks and like financial firms, they're still not even allowed to use ChatGPT for like compliance reasons, you know? And so there is a part that the usage is like accelerating, but then there is another part that is just lagging. Um, Mostly just due to like legal or like compliance or just slow moving corporations.
Yeah, those compliance things are kind of both features and bugs, right? They're like on one hand they will slow them down, but on the other they are one of the moats in AI that can kind of insulate those businesses to some degree. Not all of them,
What
but
is?
certainly some regulatory moats and kind of
Yeah.
compliance issues. And so like it does on one hand stop them from using it, but on the other hand it is a barrier against their disruption.
Yeah, I think fintech and like bio and just hardware are the things that are like more defended just because they have like regulatory moats and then just like hardware moats as well, at least for now. But yeah, it's just coming after.
It's just crazy how fast things change too. Like everybody was shitting on Apple for the past like year about how they were just so behind in AI and everything. And now I've seen tons of people talking about Apple as like a really good hardware
Genius.
But
AI.
it's like that Homelander meme where he killed a guy and everyone's celebrating. It's just like Apple spending zero
Yeah.
on hyperscaler build out, and it turns out to be the right thing just to sit on
Yeah.
all that cash.
Well, because it's like I think it was the pod with the Anthropic CEO who basically talked about like all these people committing to
Yeah.
compute. It's like if your estimate is off by even like 5%, you can totally bankrupt your business, right?
I didn't follow that maths. I need to go chat to AI
Basically
about
the
it.
amount
Did
of
you-
leverage you need to put on relative to the
Yeah.
amount of revenue you generate from all that build out.
But why? Because you're pre-committing in advance, but it's like a debt
Yeah.
covenant or something.
And you're just levering up as well. Like it's not a problem now, but it is a problem later on as you get more levered. You're just your sensitivity.
But they're just raising equity, right? They're just raising equity.
No, a bunch pivoted to debt.
Yeah. Let's say like you commit to
Okay.
2 trillion of compute and then you only make like 800 billion. That's like a massive shortfall.
Yeah.
Right.
Yeah, it started with Larry. Why am I blanking on Larry Ellison's
Oracle.
Oracle? They were like one of the early ones that pivoted, and that was when you had the first big tantrum.
But the debt is on Oracle, right? That's the thing. Like it's not. They're taking the credit risk for ChatGPT for OpenAI, not OpenAI itself.
Yeah, but it relates to a bunch of these other builders, where it's like if you don't, the revenue just doesn't flow through to the degree that you think it will, because it is all kind of intertwined.
Yeah. Yeah, I guess so. Yeah, the models are looking great now. Hey, like people weren't sure whether these things would be good businesses. They're looking like they might be sometimes I think they might be the only businesses, like the only software businesses at least left. Like, yeah.
I'm not totally
Crazy.
convinced that software just goes to zero.
I don't think so either. I don't think so
Yeah.
either.
Like a lot of think about it, like these software companies are going to be using AI to make their software better too, right? And then you get these contracts locked in. There's definitely there's going to be a lot of like compression, and there's definitely a lot more competition now. But I don't know. I'm not totally convinced that like all these software
Well,
companies are just
markets,
going to
it's kind of
steal.
just been an overreaction. Like Claude puts out a bot for this sector's dead. Claude puts out a bot for this, all this sector's dead.
I mean, the
Like there's
SaaS index was down like 80% at one point. It was like fucking crazy. I was like, man,
Yeah.
if
Yeah, just like
someone who
us.
had time, if you had good agents, if you had like some, yeah, if you're like a hedge fund, you can go look at the individual names and see, because some of them are going to probably get better with AI, right? Like more profitable. They have the relationships. They can add like agents on top. Like even what Salesforce is doing with their like sales agents, I think is pretty interesting. You know, if they can
Yeah.
literally become
The thing is,
a
you're like
Salesforce,
you
you
it's
know,
two things though, right? Like you see this name down X% and you think, oh no way, it's that bad. But the problem is you have both like earnings take a hit and you have multiple
multiple,
compression
yeah,
because and so it's just like you get hit on both, and then it's like, all right, maybe this is the right price for it in reality.
yeah.
Yeah, I don't know. I was thinking like enterprise software is probably a little bit safer than most of the other bullshit, mainly because I don't know. They'll probably, I don't know. Enterprises aren't going to use vibe coded shit, right? Like at least not for a long
They
time.
aren't, but it's like it's an option at least, right? Like they can like some they can budget internally to say how much would it take you to build this, and then when they're and also there's like two things. When you renew, they're like, okay, we're going to increase the price. Normally, SaaS companies will just like this year we'll increase the price 5% or whatever, and they can just be like, listen, no, like we know we can build this internally for this much. You know, you're going to actually like take the price down by this much. And then the other thing is just if you need less developers to do to deliver your product, then you're just buying less seats, right? For these like SaaS things that are levered to seats. Like, and so I think if all these companies get smaller, it's just like reflexive, right? On the downside. Um, so yeah, I haven't taken any stabs at SaaS. I don't have time honestly to look at the SaaS companies and like try and figure out which ones are cheap. Like I'd love to find a manager that's specialized in this because I think they'll make a killing, but I don't have the time for it to be taking punts at Salesforce, whatever.
It's
Yeah, I
probably the
feel like
right
I'm just the
approach.
dumb money in that scenario, kind of just taking a stab. And
From the dumb
Yeah.
money in most of these scenarios. That's why I'm outsourcing my thinking to you guys.
Yeah, but it's exciting and like terrifying too. Uh, sometimes, yeah. It feels like energy is a really good spot though. Like just because you have like such capped, it feels like your downside is very capped on even the most expensive things in energy aren't trading that crazy. Like maybe Constellation Energy. Okay, that's not really an energy company. It's more like a infrastructure, but they're not really trading that crazy. And it just seems like you're gonna have a persistent bid from this build out. I don't know. Yeah. And a bunch of the you see Leopold bought a bunch of the Bitcoin miners?
yeah, he's repurposing them, right?
Yeah. Yeah. Thought that was interesting.
Which makes sense. Just you have the bones.
Maybe the Galaxy will get a bid. Duncan's Galaxy
Duncan's
coming back from
fine.
the dead.
It's up today. It's up 12% just with everything else. Is this true that MicroStrategy has a MNAV premium again?
They've had one for a couple days, I thought.
Yeah,
Oh, really?
I thought they did.
that's good because it got down to
I
like,
Guess
didn't
he's
I
probably
didn't fact
buying.
check the
I
tweet,
guess
to
this
be
is the
honest.
pump.
I was gonna say, where did he get money from? This dude's a wizard with just finding money in the banana stand.
There's always money.
Crazy. Yeah, I think Bitcoin is like very like looks good. I've been buying Bitcoin
Yeah.
like last few weeks, months. It's the only thing I've been buying, honestly. Like
Yeah,
I like
I mean, gold's taking a hit,
Yeah.
right? I think part of it's there's like a bunch of apparently Korean funds or with exposure to Korean markets that had margin calls and had to sell gold as a result. I think that was part of the source of
Oh, really?
drawdown. But yeah, now you look at Bitcoin as a percentage of gold, and it just you start doing some moon maths,
really
and the
attractive
thesis
again.
is great again.
It looks cheap again. Yeah, it's nice. Yeah, and I think if Bitcoin does well, everything else will probably get a catch up bid. I still, yeah, I basically still have the same thesis on crypto I did previously. Hopefully, something in AI gets product market fit, but it's unclear to me what that'll be.
Yeah, hopefully that. I mean, and there's a world where I'm fully bought into the world that or to the scenario where it does. It just makes too much sense.
I think we'll definitely have some like insane moments of like an AI agent trading or like playing Polymarket or something like this, um, being like self-hosted on a T or something, and just like you're just watching this thing like make money on chain.
The real
Because
goat.
I've I've also been just speaking to some uh I've been just trying to speak to some more hedge funds to again try and get this exposure, and a lot of them are using LLMs to trade already, which I
In
found
what
really
way?
interesting.
Like, what do you mean?
So one of the ones I spoke to, they basically just plug in all their data, so to the LLMs, and then they're like literally refreshing it every 20 or 30 seconds, and it's actually generating like so this was a systematic hedge fund, not even a like a discretionary one, more of like a quant. And it's generating like tradable insights, like based on their context and all the data they have access to and stuff like
So they're
this.
giving it like past trades and then like parameters or things that they want it to focus
Yeah,
on.
yeah. I think live prices, volumes, like correlations, and I don't know enough about quant to really know what goes into making the soup. But yeah, a lot of that stuff they're doing, which I think is
That
makes
makes a lot of
sense.
sense. I think it makes a lot of sense to focus on quant stuff first. I feel like discretionary is a bit harder to do, but
Yeah.
it's
I would
probably
almost argue that it's like more incrementally valuable for discretionary because the quant funds were already very algorithmically driven, right? And so it's just like slapping another algorithm on top of their existing ones.
Oh yeah,
That's
yeah. It would make
that's
yeah.
yeah. Whereas like on the discretionary side, it's just like helping you process this information faster than you'd previously do it through an analyst and spreadsheets and all of that.
I'm sure that's happening like
Yeah.
on all of them for sure. I heard Goldman's also like not hiring junior analysts this year. I don't know where I read that, and it's like they're just telling all the partners to like just figure it out.
So a lot of sectors. That's being a new grad now.
Sucks.
Yeah.
Yeah.
Like that's the area where, like, if you're a lot younger, like you're still in elementary school, like high school, whatever, things will be so much different. And then obviously people who have established careers right now are in a decent spot, but it's the entry level jobs that are getting cut. Um, which is definitely seems like that's the biggest risk to the economy.
Maybe brings us to the Citrini thing. Not to belabor it, but I'm curious where you guys sit on that.
I think
I
my biggest takeaway from the Citrini thing is that the authors up front said how this was like very low probability and was kind of like this exercise in just thinking about another scenario just to like think about it so like people are aware. And everyone like really fucking hated them for doing that, right? Like people do not want to even read or think about the bear case, even if up front they're like, hey, this is mostly for like illustrative purposes, like a nice piece of writing. It's well researched and everything, but it's not like what we necessarily think is like most likely to happen. Even with all those disclaimers, like you had, first of all, it impacted the market, which is insane. Second of all, you had rebuttals from like Citadel, like
yeah,
like the Economist, like all these publications. Like everybody felt like they had to come out and say why it was wrong, which is like kind of a little bit um
Yeah, what does it say
unnerving, I
about
guess,
positioning, right?
right?
Eh,
That like everybody had to come
I
out
don't
and say why
I
it's
think it's just
wrong.
based on the amount of attention it got. I mean, what he said in there wasn't necessarily new, right? It's kind of what everyone's been thinking about as the not everyone, but like people have been thinking about the bear case. I think he just packaged it really well and into a digestible way for everyone to really kind of see the various kind of how various areas are all going to be affected and kind of all basically at the same time. But yeah, he mentioned you're right. It's an edge case, bear case. I think the biggest counter is there were no bullish elements discussed, right? And like it's not it just can't be all bearish. There's got obviously there's going to be there's like an offsetting gain in productivity and growth and all of this stuff. And so um I think it was a good piece to trigger a bunch of people. It was well written, well researched, but I assign a pretty low probability to it. Not because I don't think that some of that stuff isn't going to happen, but I just think there are a lot of bullish elements that come along with some of that stuff happening. And then even in like the biggest edge case, I think you probably get some doomsday scenarios where governments will intervene before
Yeah.
some of this stuff gets really bad in a world where we're ignoring the bullish side, or you just get like mass printing or something. Yeah.
Yeah, I think the majority of the argument is like whether you believe that it will be like every other technology where it's like a complement to labor, right? And like eventually you find new jobs that people do and they can do more and and increases productivity and stuff like this. Which I think I think it'll increase productivity regardless, but are there new jobs basically? Like there were with all other technological revolutions, or do you think like these jobs are gone for good? Um I'm like, and that was kind of what Citadel's rebuttal was like, smarter words, but I think the TLDR. And for me, I'm like a Citrini short term and Citadel like long term, basically. And that's, I think, in the short, medium term, like the path dependency. When I just look at some of my cousins or like people I know here in Portugal who graduated like with a business degree with good grades and went to work at like Deloitte or somewhere or one of the consultants, one of the and I just think those jobs are cooked and extremely hard to get back, and I think there's going to be a period of time where you just have these people like unable to get new jobs, and at the same time the rich getting richer and richer and richer, like in private markets and in public markets. And I think that has historically been, not a great combination for like social like social tensions. And I think in the long term it'll be fine. Like everything will be really cheap. We'll have abundance. I'm a full AGI pilled person. Um and people will also find new things to do. But the short to medium term I think can be pretty ugly. Like because I really don't, it feels different than the previous ones where like this thing can just is so much better than me at most things, and it's much cheaper than me. Like I have to eat and be housed and like I have health issues, like this thing is just the cost of inference and it's only going to go down and it's the worst it'll ever be. Like
Yeah, but you've
um
seen it pick up quite a bit already, right? Like it's actually, running some of these agents on an annual basis isn't, 1/100th the cost of the employee for some of this stuff. Um, so it's like there is somewhat of a floor because it just takes so long for the energy build out to happen. That is going to be the bottleneck, and for better or for worse, that slow build out will kind of, I think, act to temper the growth, but also
yeah.
probably ease the volatility of the transition. I don't know what people are gonna do though. I like it. I think in previous transitions, industrial revolution, you were doing labor in one form, but now you're just kind of still doing labor, but in a different setting and increased output. Um, and then the next generation shifted to more white collar work as tech revolution happened. I don't know where there will like this glut of unemployed kind of early stage white collar workers are gonna do.
I mean, the social unrest has definitely been increasing. Like you've seen data centers get
Yeah, that
like,
was like my big takeaway when I was reading this. Number one, right? Like if Citrini's right and it kind of goes down this path, there's no way, number one, the government doesn't try to slow it down in some way, shape, or form. And number two, there's no way people aren't just gonna like sit there and let all of their careers and livelihoods and everything and all of their ability to provide for their families. Just like they're not gonna just there will be a ton of, civil, social type of unrest before it gets to the point where Citrini's, thesis fully plays out, in my opinion. And then to Jan's point, like if you go back to the Industrial Revolution, like steam engines and shit, like yeah, somebody who rides a horse or does like a horse and buggy might not have been able to like fathom what like a car and like a highway system might be, but like it's really not that big of a retraining, right? Like you're still driving something, like it's still like in the same universe of
Yeah.
things. Whereas like now, like I don't know, maybe it just goes like the way of like, what trading floors used to be. You had like dozens or hundreds of people on trading floors with phones and shit. Nowadays you have like a couple people with a lot of computers and maybe it's
Yeah, the
just
problem is
that
when you
for
have that
everybody, right?
everywhere, right?
Yeah,
It's one
like
thing if it's in one area and they can do something else, right? It's
yeah,
just now you have quants taking over that role, but it's another if it happens in multiple places
everywhere at the same
simultaneously
time.
very quickly.
Yeah.
Yeah, like yeah. And you've seen Elon talk about kind of, you'll have UBI. I think that's a narrative he has to shill, obviously, because he needs to be glass half full to really accomplish what he wants to do. But I'm pretty bearish on when all that plays out, when just like people just can't become artists because they have nothing to do, and that's going to make them happy.
Oh man, I've seen this video. Instagram is so bad for like AI slop these days. But I saw this video and they were interviewing like Musk, Altman, Bezos, and they're all kind of like these fat guys. And it's like, and the
Yeah.
theme of this is like, when everybody lost their jobs, people started like not working, not being active, they didn't know what to do. And so now we develop blah blah blah, and it's like all these people really fit on bikes, and they're just like powering the AI. It's like this is what the normal people are like
So the
looking at
Matrix.
and thinking about, right?
I gotta
Like,
jump, guys. Sorry
yeah,
to relate to a call, but the one thing I went to Egypt the other year, and like Cairo, there's like 23 million people in Cairo, and that's one thing I often think about when I'm like, what are all the people going to do after AGI? I'm like, what are they doing now in Cairo? There's like 23 million people there. There's no real industry. There's no real like big companies that have headquarters there. And so it's like they're mostly doing like as far as I can tell, like informal jobs and like selling on stuff on the streets and all this kind of stuff. But it seems to just like work. People are living, So
eh,
I mean, obviously,
I
you
don't
wouldn't
know
want the whole world to
You
necessarily
think
turn
New
into
York
Cairo, but
didn't
Yeah,
go?
how often do you go to Cairo?
yeah, the New York slums. You think the New York slums are coming?
Everyone just pivots to tourism.
I looked out my window trying to picture Cairo. I'm like, no, like, I'm not sure that'll fly over here.
It's
That's
very
fair,
hard to
actually.
go back in standard of living.
The Cairoization of the world.
Yeah.
But yeah, guys, this was fun.
Yeah,
Yeah.
we'll
be
just
back.
wrap it in general.
Yeah.
Yeah, this was a good episode. I don't know. I feel like we're a bit more optimistic. Bitcoin was actually flat during this podcast. That's like a major win.
Damn, that might be the most bullish thing yet.
That's the most, but it might actually be up like $200. So, yeah, thanks everybody for joining. And we'll be back in a couple weeks, hopefully with 80K plus Bitcoin.
Thanks, everybody.
Why so bearish?